Are you on the lookout for a GST loan for your business? Well, you've come to the right place. Today, we're going to delve into the world of GST loans. A GST loan is essentially a financial tool designed to aid businesses and entrepreneurs in managing their finances and meeting their GST obligations. It's all about simplifying the process of filing GST returns. But that's not all. It also plays a crucial role in managing the working capital of the business. It's like having a financial ally that stands by you, ensuring that your business's fiscal health remains robust while you focus on growth and expansion. So, are you ready to dive in and explore more about GST loans? Let's get started. Before we dive into the details of GST loans, it's crucial to understand the eligibility criteria and requirements. So, let's start with who can apply for these loans. This includes individuals and proprietorship concerns. If you're an existing customer of the bank, that's a plus. Micro and small enterprises, both manufacturing and service, can also apply. Now, there are specific prerequisites that your business must meet. First off, you need to have a GST registration. This is a non-negotiable requirement. You also need to possess an Udyam registration certificate. Your business needs to have been operational for at least 3 years, and your GST turnover should be 40 lakhs or more annually. Moving on to the documentation part, you need to have your KYC, business KYC, and GST details handy. Your Udyam certificate, current account details, registered mail ID, and phone number are also required. But why should you consider a GST loan? Primarily, these loans are intended to meet working capital requirements. They are typically offered as an open cash credit or OCC. The minimum loan amount is 5 lakhs and the maximum limit is 25 lakhs. And the best part? There's no margin required. Your CIBIL score also plays a significant role in your loan approval. You need to have a minimum CIBIL score of 725 or more, with DPD not more than 60 days in the past 12 months. Once you've checked all these boxes, you're ready to move forward with applying for a GST loan. Now, let's talk about the purpose and nature of a GST loan. The primary purpose of a GST loan is to meet the working capital requirements of businesses. It's designed to help you manage your finances, meet your GST liabilities, and ensure the smooth operation of your enterprise. Moving on to the nature of the facility, a GST loan is an open cash credit, or OCC. This means it's a type of credit provided by lending institutions to cover the working capital needs of the borrower. It's a flexible solution that allows businesses to draw funds up to a certain limit and only pay interest on the funds actually used. As for the quantum of the loan, the minimum loan amount is 5 lakh rupees, while the maximum is 25 lakh rupees. This range ensures that businesses of various sizes and needs can benefit from this type of loan. With a clear understanding of the purpose and nature of GST loans, let's now look at the assessment of these loans. The assessment of a GST loan is a crucial step in the application process. It's this stage where lenders decide the amount you're eligible to borrow based on your business turnover. Let's delve a bit deeper into how this works. Primarily, the assessment method used is the turnover method. What does this mean, you ask? Well, your sales declared in the GST return during the past 12 months are considered your turnover for assessing the loan limit. Simply put, your past year's sales performance plays a significant role in determining the amount you can borrow. Now, let's talk about the assessment of the limit. The eligible limit is calculated as 25% of your sales declared in the GST return during the past 12 months. However, there's a cap. No matter how high your turnover might be, the maximum limit you can get under this loan is 25 lakh rupees. But what if you already have a working capital limit with the bank? In that case, your existing limit will be absorbed in this new limit. The total limit, including the existing one, should not exceed the maximum eligible limit of 25 lakhs. If it does, the excess over the existing limit will be treated as a separate limit under this scheme. This assessment process is designed to ensure that your GST loan aligns with your business needs and repayment capacity. It's a system that aims to balance your business's growth potential with a sustainable debt level. With the assessment out of the way, we're now ready to discuss the security and guarantee aspects of a GST loan. Security and guarantee requirements are pivotal components of a GST loan. These elements not only protect the lender but also set guidelines for the borrower. Let's delve into these crucial aspects. The primary security for a GST loan involves the hypothecation of stock and book debts. Essentially, this means that the borrower pledges these assets as collateral without giving up possession. In the event that the borrower cannot meet their repayment obligations, the lender has the right to seize these assets to recover the outstanding loan amount. It's a form of protection for the lender, giving them a safety net. Now, on to the guarantee aspect. Here's where the Credit Guarantee Fund Trust for Micro and Small Enterprises, or CGTMSE, comes in. This coverage is mandatory for a GST loan. The CGTMSE acts as a guarantor for the loan, stepping in to repay the lender if the borrower defaults. This mitigates the risk for the lender, providing another layer of security. However, the guarantee fee associated with this coverage is to be borne by the borrower. This fee is a small price to pay for the added assurance it provides. It's worth mentioning that the specific guarantee requirements can vary. They largely depend on the bank providing the loan and the amount of the loan. Some banks may require additional guarantees or collateral based on their internal policies and the borrower's creditworthiness. It's always important to understand these requirements upfront to avoid surprises down the line. With security and guarantee covered, let's now explore some banks that provide GST loans. There are several banks that offer GST loans with various features. Let's take a look at a few. The central bank offers secured GST loans with low interest rates and flexible repayment options, making it a suitable choice for those looking for a secure option. Next, the Indian Bank offers GST loans with quick and easy processing, ideal for those who want to secure their loan in a hurry. The South Indian Bank is another option, offering GST loans with no prepayment charges. This can be a great choice if you anticipate being able to repay the loan ahead of schedule. Lastly, the Union Bank offers GST business loans with easy documentation and competitive interest rates. Each of these banks provides unique advantages, so it's important to consider your specific needs and circumstances when choosing where to apply for your GST loan. Now that we've covered all the essentials of GST loans, it's time to take the next step. We've covered a lot of ground today, discussing GST loans and how they can benefit your business. We've dug into what a GST loan is, a key financial solution designed to help manage your business finances and meet GST liabilities. We've also highlighted the eligibility and requirements, noting that individuals or proprietorship concerns with a GST registration and a 3-year business vintage can apply. We've gone over the purpose and nature of these loans, primarily aimed at meeting your working capital requirements. We've discussed the assessment of loans, the security and guarantee requirements, and the banks providing these loans. We've also touched on the GST turnover-based overdraft loan, an effective short-term solution for managing your cash flows. For more information, visit the DIGI-LOANS website or contact us via WhatsApp. We're here to help you navigate your financial journey. Remember, a GST loan can be the key to unlock your business potential. Thank you for watching.